So hello guys, in today's video we'll be learning how to identify a rejection block, the most farthest PD array within a dealing range. And to be honest, if you know how to identify order blocks, rejection blocks shouldn't be a problem either. And so without further ado, let's get right into the video. Okay, so first let's learn some theory here before we dive into the real charts. By now I want to believe you know the factors of identifying a valid order block. One of the factors and very crucial one is actually the takeout of the previous candle high, in that case in a bearish scenario. So we can clearly see that price has taken out this previous candle high. And by the way, I clearly stated that takeout of the previous candle high can happen by a week or body. It's not necessarily a must for it to be by a week. And we know that if that candle gets associated with a fair value gap, then it is of course our bearish order block. And so now a rejection block is simply that wick from the top of that wick all the way to the bottom of that wick of that candle that took out the previous candle, in that case bullish candle high, then that is of course our rejection block. So you can clearly see it's part of the order block, but it is not always the case. Of course, in a bullish scenario nothing changes. We can clearly see right here price takes out the previous bearish candle low, and you can clearly see gives that rejection to the upward. That rejection wick left is what we call the rejection block. Of course, the order block is the one associated with a fair value gap, as you can clearly see right here. So of course, this is what we call the bullish order block. Again, you can clearly see the rejection block is part of the order block, but it is not always the case. We'll get to know why later when we dive into the real charts. So with this said, or with this foundation, then let's get right into the charts. Okay, so exactly right here, we can clearly see that we are in an uptrend. And of course, right here, we can clearly see price has taken out that inducement and of course made a break of structure. And we all know this is of course our extreme order block. But like I said, this week is what we'll be calling the rejection block. And that is the reason as to why I said the most farthest PD array within the dealing range. This is of course our dealing range starting from this low all the way to this high. And we can clearly see this is of course our extreme order block, and of course within that order block we can clearly see the top of the wick, and as well this here is the low. So that is of course what makes the rejection block, in this case bullish rejection block. Then after price has mitigated that, and of course you'll say that this is a order block mitigation, of which it is also right, but you can clearly see price went even deeper towards mitigating the rejection block. And again, remember, the rejection block is located at the extreme or at the origin of the dealing range. Okay, so again, price takes out the inducement, continues higher, making a break past the swing point high prior to that retracement. So price makes again a bullish break of structure, then takes out the inducement, and of course upon marking the POIs here, we can clearly see all the order flows in this case are all mitigated, and in that case we are left with the order blocks as the option for POIs. Of course, the decision order block, price failed that, and price is currently at the extreme order block, and we can clearly see this bullish reaction, kind of price respecting the extreme order block. Okay, so we can clearly see this would have been our extreme order block if price would have not mitigated this order block. Anyway, we can clearly see that this here is the candle that took out the previous bearish candle low, and of course that is of course the rejection block. And you can clearly see it's not associated with a fair value gap, meaning it's not the order block. And usually know the rules, we usually shift to the candle associated with a fair value gap, and this candle, this bearish candle is the one that was associated with an imbalance, and of course that was of course the order block, but you can clearly see price mitigated that. So meaning of course we shift to the next valid extreme order block, and of course this here makes the extreme order block. Price is currently there, and you can clearly see this bullish reaction. So this means this may continue all the way towards this external liquidity. So we can clearly see that this rejection block is not inside an order block, and that's the reason as to why I said it's not always the case that the rejection block will be inside an order block, like in this scenario, and as well the scenarios I showed during the theory part. So of course, the only time whereby the rejection block will be in play is after the extreme order block fails. At the moment, we can clearly see price is respecting it. And of course, if you were to take the entry, of course, after seeing that candle, you'll do that. To be conservative, of course, you'll place it below the most extreme PD array, of which it is the rejection block, because we know anything can happen and price can as well fail this extreme order block. But of course, playing aggressive this here will be your SL, and as well will be targeting the external liquidity. And if I continue running price here, we can clearly see that, okay, so price is giving that reaction, but then later we can clearly see that price eventually took me out. So in this case, we can clearly see that price has failed the extreme order block. And of course, the next PD array we'll be looking forward for is, of course, the rejection block. Okay, so if I continue running price, we can clearly see price mitigated the rejection block and gave that beautiful morning star pattern, of course, showcasing a clear directional shift. And that's where now you'll execute that market order. Of course, your stop loss should be at the external low, and of course we'll be targeting that external high. The reason is to I'm placing my stop loss at the external low is because the dealing range, I mean from this low all the way to that high, we can clearly see it involves or it has a major inducement. So in that case, this will make our safe SL, and we can clearly see if I continue running price exactly right here, price is heading onto our favor. That is, and of course, in due time, we can clearly see price eventually made it to the external liquidity, exactly right there, hitting our take profit level. So that is, of course, for the rejection block. All you have to take in mind is that the rejection block is the most farthest PD array within the dealing range. And of course, it's just the rejection wick of that candle that took out the liquidity of the previous bearish or bullish candle high or low, depending with the bias. So that is for me today, and if you have enjoyed the video as usual, drop a like, and of course I'll be happy seeing you in the next video.